In our previous class, we learned how to prepare a chart to calculate how to divide input tax credit. In this class, we will take up certain problems so that we can clearly understand how does it actually work. Let us take first one problem. Mr. Ramesh, a businessman, provides following information. Total sales is 80 lakh rupees. Exempt sales 20 lakh and taxable sale is 60 lakh. He has paid total GST of 1 lakh rupees and following additional information is provided. Question is, calculate eligible input tax credit. So number 1, non-business inputs, GST paid is 10,000 rupees. Inputs used for exempt supply, GST paid is 20,000 rupees. Blocked credits, GST paid is 10,000 rupees. Inputs used for making taxable supplies only, GST paid is 20,000 rupees. Now, question looks little lengthy for you, but you don't have to worry because once you remember the chart, only thing what we have to do is fill in the charts. So we will look at the chart once, then we will understand how to fill up this chart. So in the chart, what we learned, what was the first step? First step was to fill up the pebble. What is pebble? P stands for inputs used for personal supply, E stands for exempt supply, and BL stands for blocked credits. So after filling pebble, we will get a balance, we call it as C1. In the second step, what we had to do? We had to remove the taxable supply inputs. So that was the second step. So from C1, if you are removing the inputs only used for taxable supply, what will you get? You will get C2. In the first step, we are getting C1. In the second step, we are getting C2. So now, in the third step, what we had to do? I told you have to remember one shortcut. That is, England and France punched each other. So in the third step, we are removing bad credits in relation to exempt supply. We are removing bad credits in relation to personal supply so that we will get the balance, that is C3. So this is how exactly the chart works. Now let us fill this chart one by one. Now to begin with, let us start with step number 1. Now let us start the answer. So the first step, fill up the pebble. P stands for personal supply. In the problem, have they given any personal supplies? That is, input was purchased to make a personal supply. The first serial number, they are talking about non-business inputs. Non-business is nothing but personal purpose. So under P, fill up 10,000 rupees. So this 10,000 rupees GST is a dirty credit, it is a bad credit, you will not get the credit of the same. Next is E. E stands for exempt supply. Do we have some inputs which was purchased only to make exempt supplies? Yes, in the serial number 2 they told inputs used for exempt supplies. How much it is? 20,000. So fill 20,000 under E. Next is BL, that is blocked credits. In the problem, have they mentioned any blocked credit item which was purchased? They told blocked credit 10,000 rupees. So now fill up 10,000 rupees under blocked credits. So you got what is P, you got what is E, you got what is BL. So it is 10,000 plus 20,000 plus 10,000. So total is how much? 40,000 rupees. The total of pebble is how much? 40,000 rupees. Now what is the total GST paid? While making purchases, what is the total GST paid? In the problem only they have given that Mr. Ramesh has paid 1 lakh rupees GST. Now out of this 1 lakh, pebble is how much? 40,000. So out of this 1 lakh rupees, 40,000 rupees is the bad credit. So we have to remove it. So now what is the C1 balance? From 1 lakh, you are deducting 10,000 plus 20,000 plus 10,000. So from 1 lakh, you are deducting 40,000 rupees. That means the balance of C1 is nothing but 60,000 rupees. So first step is simple. The problem may look lengthier, but the solution is very easy. First step, fill up pebble, you will get the balance, that is C1. So here we got C1 as 60,000 rupees. Now let us go to the second step. What was the second step? Second step, I said we have to remove, we have to keep aside the good credit. What is good credit? The inputs which are used to make only taxable supplies. So in the problem, have they given any information like that? They told inputs used for making taxable supplies only 20,000 rupees. So now this means it is a good credit. So we have C1 balance how much? 60,000 rupees. Out of the 60,000 rupees, 20,000 rupees is the good credit. So we are keeping it aside. We are keeping it aside, that 20,000 rupees. Now we need to calculate the balance. What do we call that balance as? It is called as C2. In the first step we call it as C1. In the second step we call it as C2. Now what is the balance of C2? C1 balance was 60,000 rupees. From that you deducted 20,000 rupees, that is good credit. So now you are left with the balance, that is 40,000 rupees. So what is the balance of C2? It is 40,000 rupees. So simple, even step 2 is done. Now we need to go to step 3. So step 3, I asked you to remember one formula, that is England and France punched each other. Now let us understand what is that England and France punched each other actually is. First I said we need to find out the bad credit in relation to exempt supplies. What is the formula? E by F into C2. E stands for England, F stands for France. So E by F into C2. C2 is the balance what you calculated in the step number 2. Now what is E? E means exempt turnover. What is F? F means full turnover or total turnover. Now in the problem you need to find out, have they given anywhere what is your exempt sale? If you look in your problem, they have clearly mentioned exempt sale is 20 lakh rupees. So E means 20 lakh divided by F, that is total turnover. What is the total turnover in the problem? Have they given? They must give this information. So in the problem only they gave you total turnover is 80 lakh rupees. Here remember you are using total turnover, not taxable turnover. Now here E stands for exempt sales and F stands for total sales. Now in the problem they have clearly told you exempt sale is 20 lakh and total sale is 80 lakh. So now how do you write the formula? It is 20 lakh divided by 80 lakh into C2. What was the C2 balance in the step 2? It is 40,000 rupees. So it is 20 lakh divided by 80 lakh into 40,000 rupees. So how much you will get? You will get 10,000 rupees. This 10,000 rupees is bad credit in relation to exempt supply. So one small part is done. Let us see the second small part, that is bad credit in relation to personal supply. Again the formula is punched each other. Punch stands for 5, that is punch. Now it is C2 into 5%. What is C2? C2 is nothing but balance in the second step, that is 40,000 rupees into 5%. That is nothing but 2,000 rupees. So even this is the bad credit in relation to personal supply. So we got bad credit in relation to exempt supply. We got bad credit in relation to personal supply. So whatever the balance remains, that is the good credit. So out of 40,000 rupees, 10,000 was the bad credit in relation to exempt supply. Remove it. 2,000 is the bad credit in relation to personal supply. Remove it. So from 40,000 minus 10,000 minus 2,000. So 40,000 minus 12,000, how much it is? It is 28,000. So now 28,000, what do you call it? You call it as C3. So in the first step the balance is C1. In the second step the balance is C2. In the third step the balance is C3. Now in the end, you need to tell me why did we do this entire chart? To find out what is the eligible credit. Is eligible credit only 28,000 rupees, that is C3 balance? What is the good credit in this problem? Is it only 28,000 rupees or we have to add something else as well? We have to add something else as well. What is that else part? In step number 2, we already removed the good credits, which was totally good. So that plus the C3 balance what we need to add. So what is the total good credit in this problem? 20,000 what we got in step number 2 and 28,000 what we got in our step number 3. So total of this is the good credit. So 20,000 plus 28,000. So total 48,000 rupees is the eligible input tax credit. So now the answer should be Mr. Ramesh can claim rupees 48,000 as input tax credit. Initially in the problem, they have given that Ramesh paid 1 lakh rupees as GST. Now that does not mean that Ramesh can claim entire 1 lakh rupees as input tax credit. That is why we prepared this chart. We prepared this chart and told Ramesh, you cannot claim certain credits in step number 1. And we told in step number 2, 20,000 rupees you can claim without any difficulty. And we prepared step number 3 and told him, we first have to remove bad credits in respect of exempt supplies. Then again we have to remove bad credits in respect of personal supplies. Whatever remains the balance is again good credit. Now we told him 20,000 is the good credit what we got in step number 2. 28,000 is the good credit what we got in step number 3. So what is the total eligible input tax credit? That is 20,000 plus 28,000, that is 48,000 rupees he can claim as input tax credit. Now you have seen that using this chart we can solve any problem easily. Even if they give a bigger problem than this, you still can solve it using the same format. So format won't change, the size of the problem may change, the trickiness of the adjustment may change, but using the same chart you can solve any problem no matter how difficult it is.